The global financial crisis of 2008 is often viewed as one of the worst financial crises since the Great Depression of the 1930s. It led to the failure of many large financial institutions, the rescue of numerous banks by national governments, and significant downturns in stock markets around the world. Many countries faced housing market crashes, foreclosures, and prolonged unemployment. The crisis significantly affected various key industries, including banking, insurance, real estate, and, notably, the automobile industry. Consumer wealth saw dramatic declines, estimated in trillions of US dollars. This crisis also triggered a global recession and contributed to the European sovereign debt crisis. The initial phase of the crisis began in August 2007, when BNP Paribas prevented withdrawals from 3 hedge funds due to a lack of liquidity. This event was preceded by the collapse of the American housing bubble, causing housing prices and securities tied to U.S. real estate to plummet, damaging financial institutions globally. The crisis was fueled by various factors, including government policies that encouraged excessive home ownership, overvaluation of mortgage-backed securities, questionable practices by buyers and sellers, compensation structures that prioritized short-term deals, and inadequate capitalization in banks and insurance companies. Questions about bank solvency, declines in credit availability, and reduced investor confidence significantly impacted global stock markets, where securities suffered massive losses during 2008 and early 2009. Economies worldwide slowed as credit tightened and international trade declined. Governments and central banks responded with unprecedented fiscal stimulus, monetary policy expansion, and institutional bailouts. One of the most severely impacted sectors of the American economy was the automobile industry. The industry had already been weakened by rising gasoline prices during 2003-2005, which discouraged purchases of sport utility vehicles, SUVs, and pickup trucks. The American, Big Three automakers, General Motors, Ford, and Chrysler, had focused on these high-profit vehicles but struggled with declining sales in the mid-2000s due to a lack of fuel-efficient models. By 2006, consumer demand further decreased as credit availability shrank. When the financial crisis hit with full force in 2008, General Motors went bankrupt and was taken over by the U.S. government. Chrysler was acquired by Fiat of Italy, leaving Ford as the only American automobile company to maintain its independence. Many attribute Ford's survival during the international financial crisis to the organizational changes implemented by CEO Alan Mulally. In the following video, we will delve deeper into the One Ford strategy and discuss how organizational change has been approached in prior literature. We will explore how Mulally's leadership and innovative strategies transformed Ford and enabled it to navigate through one of the most challenging periods in its history. Change management and change leadership. Over many years, both academic and professional literature have explored organizational change and how it occurs. During a severe financial crisis, when the very existence of an organization is at risk, implementing organizational change becomes crucial. The literature often differentiates between change management and change leadership. At Ford, CEO Alan Mulally seemed to lean heavily towards change leadership. Change management focuses on controlling the change process and ensuring it follows a structured path. On the other hand, change leadership is more dynamic and focuses on inspiring and guiding people through the change. This approach appears to have been Mulally's strategy during Ford's turnaround. The rise of change leadership. In recent years, the concept of change management has gained prominence. Change leadership is seen as more dynamic and crucial in today's fast-paced business world, where quick reactions to change determine success. Products and jobs can rapidly become obsolete, and companies and individuals must identify new opportunities and act quickly. 6 characteristics of change leadership. 1. Low level of anxiety. Hire people with low anxiety and create a secure environment. 2. Emotional stability. Hire emotionally stable individuals and maintain team enthusiasm. 3. Action orientation. Hire energetic people and stimulate action and energy. 4. Confidence. Hire risk takers with a history of success. 5. Openness. Hire people with diverse experiences and skills. 6. Risk tolerance. Encourage risk-taking and evaluate staff on how well they manage risk, not just outcomes. Mulally's efforts to engage Ford employees through the One Ford strategy reflect many of these principles of change leadership. The role of organizational development. Organizational development is another approach that could have been considered during a financial crisis. OD is defined as a planned, organization-wide effort to increase effectiveness. It involves systemic learning and development strategies that modify beliefs, attitudes, values, and structures to better equip the organization to face rapid change. OD aims to promote organizational readiness for change and enhance overall effectiveness. Despite its potential benefits, there is no evidence that OD was explicitly used in Ford's case. Experts might argue that OD is not typically applied in crisis situations, but its principles could still offer valuable insights for managing change. The Socio-Economic Approach to Management, SEAM. Another approach to organizational change, especially during financial crises, is the Socio-Economic Approach to Management, SEAM. This method has been used for over 30 years to study how organizational actors behave in challenging financial situations. Understanding SEAM. The SEAM approach involves observing organizational practices over time, following their natural evolution, and evaluating the effects of introduced changes. SEAM operates through a cycle of immersion and withdrawal. 1. Immersion. Researchers immerse themselves in the field to observe and interpret practices through induction. 2. Withdrawal and analysis. Researchers withdraw to analyze their observations and formulate hypotheses through deduction. 3. Validation. The hypotheses are then tested through another phase of immersion. This cycle of induction and deduction allows researchers to understand and validate the changes being made. SEAM emphasizes that reality can only be known by modifying it, meaning that intervention and change reveal the true nature of organizational functions. Key traits of SEAM. 3 primary traits characterize the SEAM approach. 1. Change-oriented intervention. This approach is founded on the premise that reality is best understood through the process of changing it. 2. Participation and synchronization. Researchers participate with the subjects of their study, synchronizing research and action. 2. This contrasts with distant, diachronic research methods. 3. Effective change. The ultimate goal of SEAM is to achieve effective change and improve organizational performance. Alan Mulally's strategy at Ford. It appears that Alan Mulally used a combination of change management and change leadership, with elements of organizational development, OD, and SEAM, in his strategic changes at Ford. Change management and change leadership. Change management. This approach involves processes, tools, and mechanisms designed to control changes and minimize associated problems. The goal is to reduce distractions and impacts from the change. Change leadership. This approach focuses on driving forces, visions, and processes that fuel large-scale transformation. Change leadership is about the entire change process, leading to faster and more effective change. It involves big visions and empowering people to make beneficial changes. The role of OD and SEAM. Although Mulally's strategy did not explicitly involve OD or SEAM, elements of these approaches can be seen in his work. Organizational development aims to increase effectiveness through systemic learning and modifying organizational beliefs, attitudes, values, and structures. SEAM's focus on understanding reality through intervention and change aligns with Mulally's dynamic and participatory approach. Mulally's strategy at Ford. To revive Ford, Mulally employed a straightforward yet challenging strategy. His focus was on improving the quality, desirability, and profitability of vehicles under Ford's core brand. This involved eliminating unprofitable brands, closing plants, reducing the workforce, and addressing pension and medical liabilities. Financial improvement. One of Mulally's first tasks was to secure Ford's financial stability. He managed to raise $23.6 billion in bank financing by mortgaging most of Ford's assets. However, he knew that borrowing alone wouldn't solve Ford's financial problems. Management overhaul. To address the ingrained management lethargy, Mulally introduced weekly meetings that required the presence of every key Ford unit head from around the world, either in person or via conference call. These meetings were designed to ensure accountability and transparency. Each participant had to present and discuss their business unit's performance without relying on aides, compelling them to be fully aware of their operations. Visual progress tracking. To keep everyone informed and engaged, Mulally used bar charts prominently during meetings. Different colors indicated the status of various projects or programs within the overall change plan, with red signaling trouble. This visual approach helped illustrate the seriousness of problems and the progress being made in addressing them. Reversing losses in Europe. One of the key moves Alan Mulally made to boost Ford's earnings was addressing the company's financial struggles in Europe. Simply breaking even in this market added a substantial $1.7 billion to Ford's overall earnings. Mulally's strategy not only achieved this break-even point but also surpassed expectations, with losses in Europe improving significantly in 2015 compared to the previous 2 years. A major factor in this success was his decision to cut capacity in the region by 18%, saving the company up to $500 million annually. Despite Europe's sluggish market recovery, Ford found success with its smaller, fuel-efficient vehicles, leading to increases in both volume and revenue throughout 2015. This focus on efficiency and adaptability was a hallmark of Mulally's approach. Reviving the Lincoln brand. Reviving Ford's luxury brand, Lincoln, presented a more challenging task. The brand had strong consumer loyalty but lacked a sufficient range of options for luxury buyers. During the recession, Ford had to cut investments in Lincoln, leading to a decline in sales. However, with the U.S. economy improving and Ford's profits increasing, the company could now afford to refocus on Lincoln. In 2014, Ford launched the Lincoln MKZ, which saw significant sales growth once dealerships had adequate stock. This was followed by the introduction of the 2015 Lincoln MKC, a key part of Lincoln's revival strategy aimed at capturing the fast-growing SUV market. Ford's financial turnaround. Under Mulally's leadership and his One Ford plan, Ford reached its best financial state in a decade. Mulally's tenure saw the reinstatement and doubling of Ford's dividend, along with the company's return to investment-grade status by all 4 major credit rating agencies. As he neared retirement, Mulally was likely to witness Europe breaking even, Ford's market share in China doubling to 6%, and Ford reclaiming its place among the world's leading automakers. Mulally's leadership style. In a 2013 interview with McKinsey Quarterly, Mulally shared insights into his leadership and management style, highlighting the importance of change leadership. He emphasized that a successful turnaround isn't just about the top executives. It involves every employee understanding and committing to the company's vision. According to Mulally, effective leadership starts with the mindset that it is an honor to serve, whether leading a for-profit or non-profit organization. He stressed the need for a compelling vision and a comprehensive plan. Positive leadership, he said, involves conveying the belief that there is always a way forward, which is crucial for motivating the team to move the organization ahead. Inclusion and teamwork. Critical to Mulally's strategy was the idea of inclusivity and respect for every team member's contribution. He believed that everyone should feel part of the team and be encouraged to participate. Mulally illustrated this approach with an analogy. Previously, if production stopped, Ford managers would have criticized and questioned the employees. Now, the focus was on asking, "What can we do to help you out?" This supportive approach proved more effective in solving problems. Employees' buy-in was so important at Ford that employees carried cards detailing the business plan on one side and the company's culture and expected behaviors on the other. This tangible reminder helped ensure everyone was aligned with the company's goals and values. The One Ford plan. When Mulally became CEO in 2006, he introduced his One Ford plan, which became the cornerstone of the company's turnaround strategy. This plan enabled Ford to reverse its substantial losses, amounting to $30 billion between 2006 and 2008, and deliver a profit in 2009, the same year rivals General Motors and Chrysler filed for bankruptcy. Key points of the One Ford plan. 1. Restructuring for profitability. Mulally's plan focused on aggressively restructuring Ford to operate profitably under current demand and changing market conditions. 2. Consolidating vehicle platforms. Ford quickly consolidated its vehicle platforms, aiming to have over 85% of global sales come from 9 core platforms by the end of 2016. 2. By 2017, almost all of Ford's vehicles were built on these platforms. 2. This approach contrasted with General Motors, which aimed to have its platforms to 14 by 2018. Results and impact. Mulally's strategy significantly improved Ford's operational efficiency, leading to increased earnings and consistently high North American profit margins above 10%. This efficiency placed Ford ahead of General Motors in terms of profitability and market performance. Reorientation model at Ford. Under Mulally's leadership, Ford underwent a reorientation, a fundamental shift in its strategy and operations to address its financial crisis. This model of change involved a comprehensive transformation of the company's structure, processes, and culture. Mulally's approach combined elements of change management and change leadership to navigate this reorientation effectively. Managing growth and change. One of the key factors in Ford's turnaround was Mulally's ability to manage growth and change. By focusing on improving the quality, desirability, and profitability of Ford's core brand vehicles, and eliminating non-essential brands, plants, employees, and liabilities, Mulally steered the company towards a sustainable growth path. This strategic focus helped Ford stabilize its finances and position itself for long-term success. Leadership and organizational culture. Mulally's leadership style played a crucial role in Ford's reorientation. Unlike his predecessors, Mulally was approachable and engaged with employees at all levels. He introduced weekly meetings where key unit heads had to present their progress and answer questions, fostering a culture of accountability and transparency. This approach ensured that everyone was aligned with the company's goals and contributed to a more collaborative and supportive organizational culture. Sustaining success. To sustain Ford's success, Mulally emphasized the importance of controlling and managing the areas of growth, change, leadership, and organizational culture. By adopting a strategic approach to these areas, Ford was able to navigate its financial crisis and emerge stronger. Mulally's One Ford plan, which focused on unifying the company's efforts and driving operational efficiency, was instrumental in achieving this turnaround. The impact of organizational changes at Ford. The organizational changes at Ford Motor Company, implemented during a financial crisis, transformed the company from a multi-billion-dollar loss in 2006 to 5 consecutive years of annual profits from 2007 to 2012. These changes are largely attributed to the leadership of Alan Mulally, the chief executive officer of Ford during this period. This article has discussed the change management strategies that Mulally employed to modify Ford's corporate culture and operating procedures, ultimately leading to organizational success. Alan Mulally's change leadership. At the outset, it was not clear how effective Mulally's strategies would be, but it became evident that he engaged in change leadership at Ford. In today's rapidly changing business environment, quickly identifying and acting on new opportunities is crucial for business managers. Successful organizations are defined by their ability to rapidly react to change. Those that adapt and seize new opportunities will survive and thrive, while slower competitors may falter, losing products and even jobs. Final thoughts. Alan Mulally's leadership at Ford Motor Company serves as a powerful example of how change leadership can drive organizational success. By effectively managing growth, change, leadership, and organizational culture, Mulally not only saved Ford from financial ruin but also positioned it for long-term prosperity. His strategic initiatives and leadership style demonstrate the importance of being adaptable, proactive, and resilient in the face of challenges. Organizations that embrace these principles of change leadership will be better equipped to navigate the complexities of the modern business landscape and achieve lasting success.